$10 billion in revenue. They say they're making $3 billion in profit, which is crazy. Ant is now basically the size of PayPal or MasterCard. I think the question for Ant long-term is just, are they going to be able to expand outside of China? What is Ant? Ant is now basically the size of PayPal or MasterCard. They are a payment platform, a financial services platform. They have platform conglomerate Ant. Doing a dual listing in Shanghai and Hong Kong. Ant was started by Alibaba. What does that mean? So Alibaba, if you go all the way back to Alibaba Genesis, Alibaba still does multiple product marketplace businesses. The way Alibaba beat eBay was charging seller fees, right? You're a buyer, particularly for like B2B product selling, but a variety of things. You want to buy stuff from, say, a Chinese manufacturer in China, and you got eBay. These Chinese manufacturers and suppliers, they like to haggle, and they like to communicate. Well, that doesn't work well in eBay's product marketplace model where they charge you a fee on the transaction, right? That kind of presents a problem because otherwise now you can have what we call platform leakage. And platform leakage means, the buyer and the seller, they communicate and then they say, hey, I'll just transact off platform and cut the platform out of its fee. No good for eBay. So what Alibaba did is they said, hey, buyers and sellers, we're not going to charge any fees for 3 years. It's free. eBay then, a couple of years after that, exited the Chinese market. They could not compete. Alibaba instead, where you see a lot of marketplaces in the United States and Europe, they monetize as a percent of the transaction, take a kind of percent of the GMV. We call it take rate. Instead, what Alibaba's model was it was free marketplace transacting, and then they launched an ad business much sooner than Amazon. Amazon launched their ad business, decades into the marketplace life cycle. Instead, Alibaba launched ads, within 5 years of inception of the business, right? Because they needed a way to monetize, and they had now set consumer and producer expectation that they were not going to charge seller or fees on the transaction. Because Alibaba would say, here, talk to each other, call each other, text each other, whatever. We're going to be the central watering hole for everyone to find each other and transact. And then they needed to figure out a way to monetize, so they went ads. Enter Ant. Now, then you start to get as Taobao and some of these, Taobao is the name of one of, is one of the names of Alibaba's product marketplaces. So say as Taobao scaled, then you had fraud, you had payment issues, you'd have sellers that agreed to transact, but then the money never came. And so you had all these issues. So that was the genesis of Ant Financial. It was basically like an escrow account that you, as the buyer, you put your money into the Ant escrow account. And then, once you verify you've received the products from the seller, now the money goes to the seller. Problem solved. And Ant would charge a fee for these kind of escrow payment services. And so this was the genesis of Ant Financial. So it was essentially a spin out, and then eventually they spun it out of Alibaba. And if we look at some of the ownership stakes here, you'll see you basically have this blue is Alibaba ownership and Ant employees, including Jack Ma. I think Jack Ma owns about 10% of Ant. So the blue are Alibaba and Ant employees. Blue is employees. Alibaba owns about 33%. That's the orange. And then you have some other shareholders in red and investors. Alibaba spawned Ant and has a material equity stake, about 33%. If the company is worth, $300 billion, now they got $100 billion, ownership stake in Ant. Pretty good return. So let's go back to more about what actually is Ant and what do they do. We wrote a very good article back in 2019, March 2019, It's called How Ant Financial Became the Largest Fintech in the World. We basically catalog the multiple platform businesses, and there's some linear businesses in Ant Financial. So let me give you the recap here. Basically, you have this kind of payment escrow platform. That's where it all started. It's like a payment platform. Think of it as like Venmo, but is doing much larger transactions for this kind of business payment escrow service. So in 2017, Alipay had over 700 million users and $8 trillion US dollars worth of transactions. That's a lot of money. That's a lot of money. This is a payment platform monopoly in China. If you think about why this happened, Alipay was able to go into rural parts of China and solve a lot of payment issues in places that didn't have good infrastructure, but now with a cell phone and a QR code, you could transact. And so, basically they skipped over. If you think about, you see this in Africa a lot of these kind of emerging market countries that don't have this incumbent infrastructure, like this thing called credit card terminals. There were no credit cards in China. Or the only credit card that was there was basically sanctioned by like the China State Bank and had very low penetration, very low usage. But you didn't really have Visa, MasterCard, and all these US credit card companies everywhere. So you had very low penetration of some kind of, modern payment system, and Alipay filled that void. There really are no credit cards in China, or very, very minuscule presence. It's really all kind of these payment platform models. By the way, Visa and MasterCard and Amex are all of them are in Plaid. They are some of the oldest platform businesses as public companies right now. Very strong businesses, but they are payment platforms. So starts with payment platform. Then they start to add in other things. Insurance marketplace. There are over 80 insurance companies on the platform. This is from spring of 2019, and that reaches over 400 million users. Okay, insurance marketplace. And Fortune has democratized asset management and retirement planning. All of China's 116 fund managers are on the platform that reaches 180 million users. So now you have investing, you have insurance, and just wait, here's the linear, this thing called Yubao. It's Chinese for leftover treasures. It's Ant's money market fund. It's now the largest money market fund in the world with $251 billion. This was again 18 months ago. And it's the largest money market fund in the world. So this is a linear fund, right? And then they have an investment platform for other fund managers on the marketplace. But they also have their linear. Alipay or Ant Financial has their linear fund offering. What else do they have? They started with loan marketplaces. So they started with loan marketplaces. They had these linear micro and SME lending arm. They're taking on riskier loans and passing the risk on. They're basically securitizing these loans and selling them off. The Chinese government cracked down on this. There was fraud. They also have a peer-to-peer lending platform, which had issues with fraud called Jiao Chai Bao something. And so they have different lending offerings as well. Ant is doing some linear lending today, but they also do have a network of third-party lenders. Similarly to that kind of investing model, they have a linear offering, and then they have a marketplace of fund managers for investing or lenders for a loan marketplace. You have to treat your peer-to-peer lending offering different than your SME and kind of business lending. Those are very different types of products. And different types of lenders or investors would look at those differently, and also has lending. It came under fire a number of years ago because of the Chinese government, and they basically started to rein in the marketplace side of the lending marketplace as a result of that, and have now rejigged it. They've kind of moved to have more institutional lenders on the marketplace as opposed to more of these alternative lenders. And I think have kind of catered less to some of the riskier loans, and have moved kind of more upstream with what they've done with lending, just in general, and with the marketplace as a result of that regulation. But the marketplaces are still chugging along strong. Now, this is another article on kind of the the recent stats, right? So we were saying they had 700 million users in 2017. I guess now they have 1 billion Alipay users. So it's strong growth. The key thing from this article is that on $10 billion in revenue, they say they're making $3 billion in profit, which is crazy. And that is just for the first 6 months of 2020. So you got a $20 billion business top line revenue that's making, $5-6 billion in profit. That's bonkers. 43% of its revenue comes from the digital payment and merchant services. They handled now $17 trillion worth of transactions. And so this is basically, this is that escrow. This is the payment platform. Now you're using Alipay to pay all your bills, all these things. So, this is really the core of the business. This is where the business started initially, right, from that Alibaba kind of Taobao integrations, and is still the core platform business monopoly. They have easily 70+% market share of just payment transactions in China, which is crazy. So, then the other revenue comes from what they call their digital finance technology platform, which collects technology service fees from banks, asset managers, and insurance companies to make loans, sell mutual funds, insurance, and other products. So pretty much all those different platform businesses that we just went over are right here. And said its consumer and small business lending platforms had $300 billion in credit balance, and its wealth management platform facilitated $600 billion worth of investments as of June 30th. I guess that's also for 6 months. Most of the loans have been funded by banks that the company partners with, right? So this is loan marketplace, hundreds of billions of dollars worth of loan marketplace here. I think they're still taking relatively little risk and debt on their balance sheet to provide these loans. They're taking some, but again, predominantly this is all off balance sheet marketplace type business model business. It's a very strong, very, very strong company. I think the question for Ant long term is just, are they going to be able to expand outside of China, right? I mean, and I think in countries that, Western countries that are kind of now joining this US, European, and parts of Southeast Asia, and Japan, just countries that are now starting to clamp down on the unfettered access of Chinese tech companies into their country's tech scene. That is going to be a real limiting factor. India. So that, I think for me, when I look at Ant Financial just on the basis of being able to grow in China, there's plenty of growth that they can have in China. I think, their growth internationally, as we are seeing wholesale across the board for just broadly Chinese tech monopolies, is all coming into question. And, frankly, rightly so. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.